In preparation for the new digital tax accounts, the revenue are wanting to reduce the amount of data they collect on small amounts of interest from taxpayers each year. This is resulting in changes to the taxation of interest and dividends. And today I want to concentrate on the changes to the taxation of interest, and in particular the new personal savings allowance. HMRC have just published some new guidance. An important question is deciding whether you're a higher rate or a basic rate taxpayer. Remember that your interest covered by your personal savings allowance is still part of your total income and could therefore determine whether you pay higher rates of tax on other income. So with these changes, most people will stop paying tax on their interest, but this is a reflection of the level of their savings. Determining whether you're a higher rate or basic rate taxpayer is likely to be a bit of a nightmare, and there's going to be a lot of people who get it wrong. The interest covered by the personal savings allowance is pretty much what you'd expect. It's all bank and building society interest, national savings, interest from unit trusts, governments and company bonds and the like. So what happens if the interest you receive exceeds your personal savings allowance? Well, it's pretty straightforward really. You pay tax on the excess. Now the revenue will either collect this through your coding or you will add it to your self-assessment tax return in the usual way. Remember that up till now, tax has been deducted from the interest and so it was paid at source, and that is going to change. But basically most people can now forget about paying tax on their interest, but it still counts as your income for the higher rate child benefit charge. So if your interest is going to be tax-free, why use an ISA? An ISA doesn't count towards your personal savings allowance. And there will be a number of situations where the use of an ISA is preferable to relying on your personal savings allowance. So what we're seeing here is the start of some big changes in the tax system, initially affecting interest and dividends, but going on to impact on the reporting of income through your new digital tax account. We all have some challenging times ahead. And finally, a little tax planning point. You can receive interest as a basic rate taxpayer of £1,000 tax-free. If your company owes you money, then why not get the company to pay you interest, which might be around about £1,000. The company gets tax relief and you pay no tax. So this is just the start of some big changes which are coming up in the tax system. It's going to affect all of us, and we're going to have some exciting and some challenging times. We are all entering the land of dragons. I am Alan Long from the Long Partnership, making life less taxing.